conversation on the expectations from the budget 2022. The budget of hope, as we call it, is powered by Investonomics, an initiative by ICICIdirect. Joining me now is Mr. Veeresh Hiremath, founder and director, Finlit Consulting. Welcome, Veeresh.
Thank you, Gitu, and thank you, ICICI Securities, for having me on today's show. Thank you very much.
Our pleasure. Veeresh, to begin with, what is that you're expecting from the budget 2022 this time as far as the commodities are concerned?
Yeah, as far as commodities are concerned, one thing just happened before the budget is that when the suspension of futures trading in some of the agri commodities, which is not up to the mark, because what I could see is that when the futures market is in a platform for all those people who are utilizing this market as a price risk managed mechanism. So these futures market give those people a platform to mitigate their price risk, which is arising from the various factors, maybe the fundamental factors in terms of the supply, demand, the government policies, and the central bank policies, all those things. So which is somewhere impacting all those commodity users. In absence of those, the futures trading in the commodities, especially in the agri commodities, they are left with no platform how to hedge their mechanism. So my expectation could be that the removal of this suspension of the futures trading on agri commodities and making it a most robust mechanism for all those people. It could be all the corporate houses who are engaged in the procurement of various agri commodities for the value addition, and also to those people like farmers who are a little bit worried about the price fluctuation. Sometimes what happened, these farmers will not get the remunerative prices for their produce immediately after the harvest. If the futures market is available, they can have a fair idea what is the price that person or that farmer is going to get once his crop is ready for harvesting, and it will help them to deciding on the cropping pattern also. So the first and foremost thing is that the removal of this suspension of the ban on the futures trading in agriculture commodities.
Okay, Veeresh, but we are now concerned about rising inflation, and it is, usually talked about that in commodity markets, it's more of, speculation than hedging. So with inflation raising its head once again, do you expect this to really happen?
See, yes, really inflation is a matter of concern. When you look at these agri commodities, their contribution to the overall inflation is very, very small. And even if you look at the historically, whenever the ban on any of the futures trading happens, despite in absence of that one, the prices of those commodities have risen. In case of the pulses have gone to the almost more than double, 200 to 250 rupees per kilo. That happens. And if you look at the perishable like tomato and onion. So even there is no futures trading, then the prices are shooting up. So somewhere it is happening that it is a kind of an concern created in the market. This futures trading, the speculation is leading to the price rise. When you look at as I said, the contribution of these commodities into the overall inflation, the component, it is very, very less. Yes, there is a little bit of concern. And what could I suggest is that there is some mechanism where the government and the regulator bring in and control this speculation. Maybe we can allow those actual participants like farmers and the traders and the processor to be more active on this market, and also remove all these speculators from the market. There is a certain mechanism to happen. When you look at the other countries and all, the entire agri trade happens through the commodity derivative exchange only. If you look at the China, look at the US and all, they had a very old and strong system in place where the entire transaction happens to that platform.
Veeresh, do you expect some tampering with CTT this time?
See, the CTT has been a talk whenever the budget comes. Okay, so look at the CTT per se. Since in commodity we are having only the futures and options. On a futures, the CTT is applicable for only those positions on a sell side. It has been a demand from the industry because if the CTT reduces, then we can make the big volumes and all. I don't think the CTT will be removed. Maybe some kind of an rational can be done. And more importantly, yes, definitely CTT is an additional cost for all the participants. Rather than removing this CTT and all, there is a need to make the system more robust, more transparent, so that all the participants could take advantage of it.
Viresh, are you concerned about the rising dollar? Because now the Fed is starting tapering by the mid of this year, and then you have rate hikes which are expected to happen 4 times this year, starting beginning March. So, what is your view on the currency, and do you expect the rupee to depreciate further against the dollar?
Yeah, given the current situation, the dollar, when you look at the today's dollar index, which is trading almost the highest level since July 2020.
Mhm.
Going forward, yes, the Fed has been on a hawkish on their interest rate policy and all. That is somewhere give a kind of a boost for the dollar to strengthen further. That winter will have a little bit of room for the Indian rupee to depreciate further. I could say maybe around the 77 we can see in the near term. And when that level comes, then obviously the RBI will come and intervene. And the look at the last 2 3 years trend, the RBI has been able to control the Indian rupee in the band of 74 to 77 or a 78.
Mhm.
So whenever the rupee depreciation happens, definitely the RBI intervention will come, and that will cool down the currencies.
Mhm. Let's talk about mutual fund. Mutual fund had a spectacular year, 2021, as far as the asset under management is concerned, and people have been really going in for, aggressive on the equity funds rather than debt funds and the other. And then we had a gamut of schemes like flexi schemes and balanced funds. So, how is the mutual fund industry shaping up, and what is that you're expecting from the budget to really give a boost to this industry?
Yeah, in the last 2 years, there has been a tremendous growth in the mutual fund investment in terms of the inflows and all. Since one side, the volatility in the equity market, that is making some part of the traders or the investors to take a very cautious approach, and it is making them a little bit of a difficult in a stock selection, stock identification, as well as the entry and exit. Rather than doing all these kind of an activities, most of the small scale and retail investors, and also all the working professionals, they are resorting to the mutual fund, because this entire work of stock selection, identification, everything will be done by the mutual fund. Definitely the mutual fund is gaining attraction. And also if you look at the last 1 year, and the new mutual fund houses also entered into the industry. So the overall the mutual fund industry has been increasing. Obviously the equity funds gaining attraction, because given the situation, the global equity market is performing, though the market is in a kind of a consolidation trend as of now. Still the lot of education, a lot of awareness is being generated among the investors, rather than going for the single stock trading and all.
Mhm.
The lot of advice is given for all those people who don't want to spend that lot of time in a stock selection, stock trading and all. For them, mutual fund is a very good option. Yes, debt fund is on another side, because debt fund, the people are little bit hesitant to do that one. Whenever the mutual fund comes, the overall mindset of the investor is to have a long term goal, maybe 3 years, 5 years, maybe even beyond that 5 years also. So they want to get some good return on their investment after the 5 years, 7 years, or a 10 years. For them, equity based funds are very good. And recently, when you look at the hybrid funds along with equity and debt, the another commodity is also entering into the segment. And slowly, the couple of mutual fund houses, they are also using a commodity derivatives as their portfolio whenever they are designing any of the funds under a hybrid funds.
Mhm. Viresh, coming back to commodities, there has been a favor towards eligible foreign investors to invest in the commodity derivative segment. Do you see some kind of an announcement or something happening on this front?
Yeah, when you look at the entire gamut of the commodity segment, uh, be it a bullion, metals, energy, or agri commodities. For India, we are having a already established benchmarks. For gold, we are having a COMEX. For energy, we are having a NYMEX. And for metals, we are having a LME.
Mhm.
Eligible foreign entities, they can come into the Indian market only when they don't have any other exchange to hedge their price risk. And also there is certain criteria for those eligible foreign entities. to trade in the Indian commodity market unless and until they don't have any exposure to the Indian commodity market. So they are not allowed to trade in the Indian commodity market. In such cases, we are having very couple of products where they can come and hedge their risk in the Indian market. Some of them are the pulses and the spices. And for rest of the segment in agri commodity segment, we're already having a global benchmark. Most of the people, they will be following the global benchmark whenever it comes to hedging their price in those particular commodity segment. Yes, eligible foreign entities is a good concept. Unless and until we don't have a very strong, robust, and a transparent mechanism for those commodities where there is no global commodity exchange other than India, then it will be a little bit of a challenge, and it is a need of the hour from the government side as well as the regular to make the commodity delivery market in those commodity segment to be most robust and efficient.
Veeresh, talking on the same line, if we see that SEBI allowed mutual funds to really trade in commodity exchanges for a few years back, but not even a single specific standalone wealth product has been developed by them so far. So when we are expecting foreign investors to really come into India and participate in the commodity market, wouldn't it be better to first focus on the domestic institutions and really prompt them and give them the platform to participate in the commodity exchanges?
Yeah, there are two concepts. One is a foreign participation, FPIs, and EFEs. So in commodity market, they have coined a separate term, EFE, eligible foreign entities, and they are not giving an option for just to trade. Even though any of the foreign entity, they don't have any exposure to India, they can't come and trade in the Indian commodity market. That holds good for the Indian entities also. Even any of the Indian entity, any of the corporate in Indian subcontinent, even they want to hedge their price risk in the global market, they need to have exposure to their particular commodities, and they need to go for the lot of due diligence and regulatory compliances. Even if you look at the metal traders, those metal traders in Indian market, they cannot go on a LME just for trading. They can go only for hedging their price risk on LME. That holds good in the case of the commodities when it is allowed for the EFEs also. Yes, there is a valid point that the lot of domestic participation, especially for those big people, all the maybe producers or sellers, they should become more active on the Indian commodity market to make it a more robust system in the entire world.
Thank you, Veeresh, for your time and your comments on what to expect from the budget 2022.
Thank you, Gitu, for that amazing insights.
Thank you so much.
Investments in securities market are subject to market risks. Read all related documents carefully before investing.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from ICICI Direct.